Motor Company profile. It was founded in 1948 and it is a Japanese multinational company that operates globally in the production of motorcycles, automobiles, and mobility products with strong research and development capabilities. As a multinational firm, Honda faces exchange rate risk due to transactions in multiple currencies, which can affect its revenue, costs, and financial performance. Therefore, the company practices ethical and responsible financial management to ensure transparency, protect stakeholder interests, and support long-term sustainability. Honda Motor Company Limited is also guided by a corporate philosophy that emphasizes innovation, high quality, customer satisfaction, and improving people's lives through sustainable mobility. Its mission is to serve people worldwide by expanding their life's potential, while its vision focuses on achieving a carbon-neutral society and eliminating traffic collision fatalities involving its vehicles. In line with this, Honda's key goals include reducing environmental impact, advancing hybrid and electric vehicle development, improving road safety technologies, and maintaining long-term global competitiveness and
Exchange
financial
rate forecasting is important for Honda because currency fluctuation directly affect export revenue, production cost, and profits. Accurate forecasts help Honda plan pricing, manage cost, and reduce financial uncertainty. This also support better long-term planning and protect shareholders' value. Honda uses different exchange rate forecasting techniques to manage currency risk. Fundamental forecasting focuses on economic factors and is useful for identifying long-term currency trend, but it may not be accurate in short term. On the other hand, market-based forecasting relies on financial market data and is more suitable for short-term planning, although it can be affected by market volatility. Therefore, using both methods together help improve forecasting accuracy. Ethical exchange rate forecasting require Honda to use realistic and unbiased assumptions. Overly optimistic forecasts can mislead stakeholders and result in poor financial decisions. Transparency in explaining forecasting limitations is important to maintain trust and support responsible financial
Today, I will explain about Honda exposure to exchange rate fluctuation. Honda operates globally and deals with other currency such as yen, US dollar, and euro. Because our foreign sales are converted into yen, they may affect into their revenue, cost, and profit. Firstly, types of exposure. Honda faces transaction exposure from their exports and imports, while the economic exposure can affect their long-term competitiveness and cost. Next, translation exposure, when foreign financial statements are converted into yen. Secondly, company-specific analysis. Honda earns a large share of revenue overseas and produces in many countries, so that the exchange rate movement can significantly affect for their profitability and financial performance. Lastly, transparency and reporting. Honda clearly reports their exchange rate risk in its annual report so that they can help stakeholders understand and risk and supporting their ethical transparency and sustainable business practices.
Impact on revenue. About 16% of Honda's revenue comes from US dollar and euro markets, around 12 trillion yen. If the yen weakened by 10%, Honda's reported revenue will increase about 1 trillion yen. This increase is because of exchange rate changes, so Honda's performance looks stronger. Next, impact on profit. Honda's operating profit is about 1 trillion yen and around half is affected by exchange rate. When the yen weakens, profit can increase by about 16 billion yen, but higher import costs reduce some of this benefit, so the final impact is positive but smaller. Lastly, impact on shareholders. Higher revenue and profit increase earnings and cash flow. This helps Honda invest more, grow the business, and pay stable. Next, I will explain Honda's most significant exposure, which is transaction exposure. This exposure is the most important because it affects real cash inflows and outflows, not just accounting numbers. Honda earns a large portion of its revenue in US dollars, but most of its costs and financial reporting are in Japanese yen. This creates a currency mismatch. If the yen becomes stronger before Honda receives payment, Honda will get less yen when converting its US dollar sales. This means less real cash to pay suppliers, loans, and daily expenses. Since Honda has a small profit margin but very large sales volume, even small exchange rate changes can cause big losses and quickly affect profits and operations. Let's talk about Honda's hedging strategies and recommendations. Exchange rate fluctuation affect Honda's export revenue, import payments, and foreign currency obligation, so Honda must hedge to protect its cash flows and financial stability. First, forward exchange contracts. Honda can lock in a fixed exchange rate for future US dollar sales. This helps Honda predict yen cash inflows, improve budgeting and cash flow planning, and plan supplier and loan payments. Second, natural hedging. Honda can increase local production and sourcing in overseas markets. By matching revenue and cost in the same currency, Honda can reduce reliance on financial hedging and also support local
For
supply
conclusion
chains.
and recommendation, this study showed that Honda faces high currency risk due to its global multi-currency operation. Exchange rate forecasting is therefore crucial for effective planning and investment decision. However, both fundamental market-based forecasting methods have limitations. In terms of recommendation, Honda should combine both forecasting approaches to improve accuracy and reduce bias assumption. The company should also strengthen hedging strategies using forward contracts and currency swap to reduce transaction risk and earning volatility. To manage long-term economic exposure, Honda can increase local production and sourcing to match cost and revenue. Lastly, clear disclosure of currency risk is important to enhance transparency, ethical governance, and support sustainable long-term growth.